Hi, I'm Alison from FX Scouts. In the last video, I discussed step-by-step how to trade the pullback strategy, and I discussed how to identify the trend, how to find the pullback, what to look for in terms of a signal, what to look for in terms of a trigger, how to open your trade, how to set your take profit and stop loss, how to monitor your trade, and then I discussed how to go about closing your trade. In this video, I want to give you a practical example of how to trade the strategy. So as you can see here, I'm trading the Euro USD, and the price has made consistently higher highs and higher lows, respecting all three moving averages, the 26-day moving average, the 50-day moving average, and the 200-day moving average. And you can see the moving averages crossed over here, indicating a strong uptrend. So what I then looked for was the pullbacks, and you can see them here. I also looked for areas of value, and this is where the 26-day moving average provides support, and it provides some evidence of where you might find a change in direction or where the pullback may occur. You'll also notice here that this is where the Fibonacci 61.8% retracement level from a recent long downtrend occurs. And the 61.8% level is a particularly strong Fibonacci retracement level. If we look at our entry signal, it is always a pattern that gets you into the trade as long as certain conditions are met. And in this case, the conditions are that you are trading in the direction of the trend, which is very important, whether the trend is strong or weak. In our case, it's a strong uptrend. And then the area of support or resistance. In this case, the price keeps retracing towards the 26-day moving averages, and it's also retracing towards the Fibonacci 61.8% level before continuing upwards. What you can also see is following the retracement to the support level of the 26-day moving average, there was a bullish engulfing candle. And this candle is a good indicator of a continuation of the uptrend. And your trigger would be to buy at the breakout of the swing high over here, or at the close of the bullish engulfing candle. And this correlates with a recent swing high before the pullback. So that is a good entry signal. Next, you need to consider your exits to protect your account and maximize your profits. So to do this, you want to exit the trade when your trading setup is invalidated. So in a strong trending market like this one, you could use a trailing stop loss set at the 26-day moving average level, which in this case would be 49 pips behind your entry. If the price moved below this moving average, it would be invalidated. Trailing stop losses follow the price at the same amount of pips behind to lock in profits. You also want a decent reward ratio, and so I would set my stop loss around 100 pips from my entry. And as you can see here, it yields a very good profit. Of course, you want to monitor your trade, and if it goes against you or there's been some big market news, then you can simply close your trades. Thanks so much for watching. If you have any questions, please send them through to us. Our website is fxscouts.com. And please remember to subscribe and like.